Hello and welcome to Simply inTAXicating. The much debated new tax regime under GST for the real estate has been finalized by the GST Council at its 34th meeting recently. The Council debated it in two phases, and of course it was a very controversial issue for most of the members of the Council. And the Council had decided to, keeping in mind the consumer interest, a new tax regime from 1st April 2019. Thankfully, the Council also approved an optional scheme for the ongoing projects. And the new tax regime talks about 1% tax rate on affordable housing and 5% on other than affordable housing. But what is missing is the input tax credit. Apart from ITC, there are several other restrictions which are going to be imposed. We have 4 domain experts who will go deeper into the issues, find out how justifiable, how legitimate these restrictions are going to be, and how difficult it's going to be for the revenue authorities to enforce this new tax regime, and whether ultimately the benefit will certainly filter down to the buyers or not. That's another major question. So we have Mr. S Dutt Majumder, former chairman, CBEC, and also a seasoned author of GST. He has written several books on GST now. Then we have Mr. Puneet Bansal, partner, Nitya Tax Associates, our knowledge partner also. And he will look into this legal aspects, the kind of litigation which this new tax regime may generate. We have Mr. S K Rahman, ADG, DGGST, and also a member of the law committee, very closely associated with the new tax regime being evolved and approved by the GST Council. We have Mr. Bisla, senior advisor, CII, another domain expert who has a lot of insight into this issue. So let me start with Majumdar. Sir, tell us briefly about how do you look at this change, how desirable it was, whether it was needed or not, and the changes which have been already approved by the Council. Maybe say briefly for the benefit of viewers you would like to recapitulate.
Yeah, you see, when the GST was introduced, a few sectors in particular were affected, but the GST, the effect of GST on real estate was one of them, one of the important ones. But the GST effect of real estate was not really due to real estate. It was basically, it started with the demonetization. That was the first hit on the real estate. And then you may say the GST added to the, in certain respects.
Shoulder to the injuries.
But then credit goes to the GST Council that when they realized these things and all the chambers and associations, they had brought it before them, before the council about the difficulties. They have taken corrective actions, as you have mentioned just now. I did not repeat it. So the position now is that I think it is gradually going towards a very realistic situation, but there are certain issues which I am just giving you a very macro view on this. Now, if you see this option of that whether to the transition provision, which is the latest, which was the main headache of the real estate, that how will you take care of the buildings which are already started at different stages of construction, and then the first April you are putting the guillotine on that. Right. So this has been beautifully clarified, and then before that the concession given for affordable houses, and the definition is very clear. Affordable houses, there is no issue. Projects, ongoing projects. I think ongoing projects, there are certain issues. The definition of project has to be very clearly given. One can go to the RERA, but then still I think for this particular GST Act, in the rules perhaps some definition is needed on the ongoing project. Now if you see the way it has been done, as I see it, it's like this. If I have started a project on the real estate before 1st April, then if I am nearing completion, then I will go for taking the input credit and paying the higher rate. Why? Because I have already, when I made my booking, I mean sold my flats and all, I have put that into account that how much credit I will get and how much input credit he will get. Because of input credit, how much will be there. So I'll pay because I've got the benefit of the input credit on that. So I will go. But then if I have started the project new, perhaps I will go for the other option, that I will go to the lower rate. Now here comes the role of the certain conditions which have been given. Of course, from taxman's point of view, compliance they have to keep in mind. because there may be, if the credit is not utilized, then there may be more transactions in cash, so that they're not taking credit, so it hardly matters. By taking credit, at least the transactions become from informal to formal. So certain things have been like 80% has to be from the
GST
registered
suppliers,
person.
yes.
So that tax has to be paid at some stage. So that isn't taken care of. 20% you can do from the others. And then the other second, the commercial establishments, that also up to 15% it has been that you can have
Clarified,
this
yes.
clarified that 50% also be considered as a part of the residential. So you will get the benefit. But beyond that, some more clarification we need. What will happen if this thing is 18% or 20%? Will it be that the entire thing I have to pay, or I'll pay the
only on the excess
rate,
part.
only the excess part? That was there is another clarification we needed. There are certain others like that. I'm not going into details in now. And the other thing was that one is 80%, then one is that 15% for the commercial matters. And the other thing is that you will see that actually I've read that some of the chambers and associations have also voiced it. These are all good, beneficial to the real estate sector, but there will be too much of compliance requirements. And because of which the job of accountants will increase a lot. And their internal audit has also to be very thorough, because now the officers will have to have more auditing of those things to see that these conditions have been satisfied or not.
Right.
So here again, naturally, the sector is apprehensive that whether our compliance burden will increase, and ultimately the benefit that we are getting, how much it will be actual benefit. So this is a concern.
So, Puneet, I mean, before I ask you, let me congratulate you for setting up a new office in Bangalore. In fact,
Thank you.
It's expanding like GST, the base is growing. So
Thank you.
Congratulations. But before we get into the nitty-gritty, the primary question which most of the flat buyers, the consumers, most of the people have in their mind is it really going to benefit the consumers? How do you look at this question? Because this is a debatable issue.
Yes.
That this change will benefit the consumer or not. Of course, the real estate developers, they have to bear with the punches, which Mr. Rahman will ensure that. So, but the point is the consumers, whether they will be really benefited.
Right, right. So, broadly, the government's proposal is that on affordable housing projects, 1% GST will be there, and non-affordable, it will be 5%. And this is without any input tax credit. So, to answer the question whether consumer gets benefit or not, first thing we need to see what is the definition of affordable housing, which has been voiced by various states also, that limit of 45 lakhs of a residential property, especially in a metro like Delhi, Mumbai, etc. That's too small amount.
Okay.
So what sort of projects will actually get covered under affordable housing? This itself is under doubt.
Okay.
Second, at a macro level, automobile from a goods perspective and real estate from a service perspective, in my view, these are the barometers of the economy. If these sectors are doing well, that shows economy is doing well, or vice versa also. So the government's endeavor should be to encourage these sectors as far as possible. My understanding of these new proposals is that the government felt that whatever input tax credit got available to real estate companies after GST, that was not being passed on to the end consumers, for which the government created anti-profiteering mechanism, National Anti-Profiteering Authority. In my view, if it was not happening, it was for them to ensure that. But the two broader principles because of which GST was introduced, one was seamless flow of credit. We are breaking that now. Second, ease of doing business. So if we see the proposals which are coming from press release, and frankly, devil lies in the detail when the notification, etc. comes. Lapsing of ITC, reversal of ITC in respect of ongoing projects, reverse charge becoming applicable for JDAs, etc. Then mandatory condition of 80% procurement from registered suppliers, etc. In my view, we are making life too complicated for real estate companies to implement. If that becomes simply complicated, then the natural consequence is it's very difficult to determine how much ITC it is getting lost or how much ITC was earlier available. So in my view, it is questionable whether overall cost of residential properties will reduce or not. But yes, we are actually looking at tax regime becoming complicated. And when it becomes complicated, the assessees also may take advantage of it, and the revenue officers also have some reason to create a dispute. So I am very much against this proposal. Yeah.
Okay. In fact, what Puneet is suggesting is that the real estate sector, historically speaking, if you look at accounting, bookkeeping, certainly has not been one of their fortes.
Correct.
Very loose, perhaps because they have been accommodating a lot of loose cash, and for various reasons. But it's a very vital sector, rightly suggested that it accounts for a major component of the GDP. It gives employment to a lot of people, semi-skilled, skilled, all kinds of people. It generates employment, and it's one of the the indicators of the health of the economy. Looking at all these things, one concern is suggested that not necessarily that the benefit will pass on to the consumer, the flat buyers. Then to what extent the government will, either the consumer should gain or the revenue should gain, or maybe even the developer should gain. There are three stakeholders, and it appears that nobody is gaining unless Mr. Rahman said that yes, we will gain. Then it's fine. At least somebody is happy. So what has been your insight?
So if we think over the impact of GST and these recent proposals of GST Council and the government for doing ease of doing business and rationalization of GST rates, I think personally that it should be a win-win for all the three, for consumers, for government, as well as for the real estate developers also. When we see the treatment of payment of tax by real estate and housing sector from the very beginning, there has been so many complexities, accountings, then so many issues that one person books the flat just for initial payment only, then he backs out, bills are being raised continuously, then real estate people have to deposit service tax on it because the bills have been raised.
Right.
Time of the point of taxation creates. Then somebody may back out after payment of 2-3 installments, then tax period may also be over. So it was so difficult to adjust those back out treatments. Now under the present scenario, if we see that option has been given, so the developer may see that if the input tax credit is coming more to them, they may opt for the ongoing projects. Yes, we will remain in the existing regime. And if they feel no, input tax credit not to that extent and compliances are very difficult, then it is for them to opt for the easy method, just pay 5%. So that way, if you see the perspective of the consumers, earlier also input tax credit was, I think, a remote sense for the consumers, how much the real estate developer is getting input tax credit or not. They were concerned for their basic price as well as the tax, and tax was always extra to that, whether it was VAT, whether VAT on service tax or service tax on VAT, these were also issues. Even under GST, the GST was clearly visible to the consumers, right, but not the input tax credit. So that way, I think the decision taken by the council are welcome that way.
Okay.
And for the compliance is concerned, the time is there. Real estate developers may see themselves which scheme will be best suited to them. Now, if we see some more clarifications are required, I think the notifications are yet to come.
Right.
Rahman sir will put light on this.
Okay.
Government will give the clear findings how the 15% commercial area will be counted. If it is more than that, how that will be covered, whether the entire project will be apportioned between the residential and commercial area or not. Right. And same thing, you see the decision of the treatment on TDR, FSI, long-term lease, more or less the issue is resolved. Okay. And as long as the exemption is concerned, if the finally GST is paid,
Right.
on the
you
purchase,
remain exempted.
then it is exemption.
Right.
And if it lingers on up to the occupancy certificate or the registration date, then of course there is no exemption. The point is then the GST has to be paid retrospectively.
Right.
That is the point, because the TDR.
So you are suggesting that
JDR,
I should congratulate Mr. Rahman.
Yeah, we congratulate.
So I will, I will congratulate him more because, for the optional scheme, thankfully, I mean, they considered that for ongoing projects. Otherwise, there would have been a much greater base.
Much greater.
From the Puneet perspective, it would have been, much greater base. But I was wondering that you have approved, I mean, Council has approved optional scheme for ongoing project. Why not to make the entire scheme optional from 1st April? I mean that could have been another scenario.
Better idea.
In this kind of competitive economy, and if the consumer is the king, and so the government should have given this option that okay, you opt for this. It's a very simple 1 to 5%, or you continue with this 12%, whatever. I mean, was it? Maybe better.
To answer your question, first we will see why exactly we have gone for this scheme.
Okay.
If you see, as Sir has also mentioned, this real estate sector is the biggest employment source. Lot of people are employed on the real estate sector. Two, the government of India has already aimed for providing housing for all. If you see pre-service tax, during service tax regime, certain ITC on the inputs was not allowed, input services was allowed. So after GST is launched, the ITC on the inputs also allowed along with others.
Right.
But unfortunately, from the buyer's point of view, what has been reported, what has been felt by many, is that the benefit of ITC that is given is not passed on. If you see services where the recipient is mostly B2C, mostly consumer, where he doesn't have to take the ITC credit on the final supply that he receives. So we felt, the government felt, the two on the demand of the real estate industry. In fact, some of the very famous trade organizations have approached government repeatedly for last almost 9 months, saying that the real estate sector is in little bit difficulties. The projects that have started, bookings are not coming. So kindly do something about the rate reduction. What was the rate that was available? Effective rate was 12% for all categories. For affordable category, it was around effective rate of 8%. Right. Then government seriously thought about it, started the discussion 32nd GST Council meeting. Then group of ministers have looked into that. They have come up with good proposals wherein the government is offering straight, can you imagine straight 1% for the affordable houses, which is around 45 lakhs. And my fundamental question is, if a person is ready to purchase a house for up to 45 lakhs, any person can ask him, can't you afford to pay 1% tax on that? 1% tax on an affordable house where you can afford to invest around 45 lakhs to the effective rate of 12%, that is other than affordable houses that people are paying, has been straight reduced to 5%. There's a huge gap between 12% to 5%. The fact that ITC is not being passed on is corroborated by the revenue figures that from the real estate sector, if you take the total GST that has been paid in cash other than the ITC, the figures are very scary. From the time 1st July onwards, nothing much has been realized in cash after the real estate has been brought into GST from 1st July. So looking at that, government wanted to make the job easy. As we have been committed, as I have said earlier also, we are trying to make it as simple as possible, if not good and simple tax. We are also trying to make it that the government and the real estate sector go hand in hand. Like you mentioned, whether you are gaining, I am gaining. After all, government is the people. Real estate sector is the government. Here, it is the real estate sector which will be gaining by offering new tax rates to the buyers who do not require ITC. Most important development that probably you have noticed and is that the TDR, Transfer of Development Rights, the FSI, the other liabilities, JDR that are all there, that have been exempted. From 1st July onwards, if you have seen,
there is some clarity
many of the ordinary citizens of this country who are landowners, who are having a plot of land offer it to a builder for developing, let's say, around X number of flats. Out of that, some flats are given back to the builder and balance flat is sold by them. So the law was saying that he shall pay, tax on the,
on execution of that
on execution
agreement.
of the JDA to the builder. Meaning landowner, I have to register. I had to pay tax for the service that I am offering it to him. I am offering, plus at the same time, builder after constructing the flats again will have to charge GST on the flats and sell it to me.
And valuation was also another issue.
Valuation was also different.
So
now we have made it ease of doing business, as India is doing very well, and we intend to do. We have rank is now 100. We intend to do that, especially on the construction sector. We said saying that this is to be first exempted, where GST is required to be paid. Fundamentally, you are aware GST is required to be paid only if the supply is under construction building.
Right.
If it's ready to move, constructed building, all of us aware there is no GST.
Correct.
So on those under constructed buildings, if the builder hands them over to the landlord, he need not pay the FSI, TDR, long-term lease. Nothing is to pay.
Right.
Only if he hands it over completely finished building, where GST is not charged, to compensate that is the tax is being levied.
Correct.
So overall, like Mr. Bisla has also mentioned and Mr. Puneet Bansal has also mentioned, if you say balanced manner, one, the tax has been reduced from 12 to 5. Two, ITC is not given benefit to the builder, which may, like you mentioned, whether the cost will increase. For the builder, the ITC which he was able to take, he was taking credit, now is not able to take credit. He may try to make it as a cost and pass on. But if you look at it whole, if you look at it from the point of TDR being exempted and he doesn't have to pay, then all these aspects, if you see, balanced view is that we are telling about a long term, it is bound to be beneficial to the consumers.
Mr. Rahman, one point Puneet ji raised, very valid point, that for metro and non-metro, you have made in terms of carpet area, it is 60 and 90 square meter.
Correct.
But similarly in price, perhaps, this 45 lakh capping, perhaps could have been better for non-metro and maybe 55 or 60 or 75 for the metros, because metros the lands are more expensive. It commands more premium.
Correct.
Maybe I mean that is something which perhaps government could have considered, because any flat for 45 lakh, even in reasonably DDF flats, etc., and it's not available.
One clarification is also required whether 45 lakhs includes land value also. If it includes the value of land also, then nothing.
I'll come to that aspect. If you now talk of GST, one nation, one tax, so one rule, one act only has to be there, one notification has to be there. So we cannot make the value different from different parts of the country.
No, but sir,
I'll come to that. I'm just coming to that. When we said the definition, if you see affordable house definition that was proposed, I am speaking purely from the press note that has been given after 33rd GST Council meeting and after 34th GST Council meeting. It said saying that three things. One, if it is a metro area, it is 60 square meters. If it is a non-metro area, it's 90 square meters. And the value is up to 45 lakhs. And also we have said any projects which are already under affordable sector by the housing schemes of both central government and state governments are covered. So if you talk of, like he was mentioning about, let's say in the metro areas, let's say Bombay, most of these projects that have been taken up, if they are in the inner areas of the Bombay, they are anyway covered by the affordable housing definition under Prime Minister's Yojana program or state government's program. So that protects them to not to go even though that 45 lakhs is there. If you like 60 square meters / 90 square meters with a value cap of 45 lakhs and the houses that are covered under the Prime Minister's scheme as well as other yojanas. Thereby, for those schemes, it will be anyway applicable, because today also a effective rate of 8% is applicable to them. So to a large extent, it will be covered. Two, he is mentioning saying that 45 lakh appears to be too less for metro cities like Bombay and Delhi. Yes, you are partially true, you are correct. But if you see other than this Prime Minister's Yojana program, other schemes, if you take Bombay, let's say Badlapur, that kind of area they will be constructing. I myself have lived in Bombay for a long time, especially I have seen that. 45 lakhs is a reasonable figure for 2-bedroom house for affordable nature in areas, outskirts areas such as Thane, Badlapur and other areas in Bombay. I think it's a reasonable figure, but let the government roll out the scheme, let us see how does it work. These are all the escalatable and changeable parameters. They are part of the notifications only. If the demand comes from the trade and other people saying that this has to be refixed, in fact, it has come by one of the honorable finance minister of a particular state and the 34 GST Council meeting also. We are open, and the government said that, our union finance minister said that it will be considered. The group of ministers continues to work. It's not that group of ministers is not working, it's not that GST
it's not disbanded or something, they continue.
So they continue to take this kind of feedback, and government is ready with open mind to accommodate this kind of things.
One point, I just want to ensure, because it is for the audience, the netizens to see.
Yes, sir.
The word cash is used in a different sense in the real estate sector.
Yes.
So when you say they're paid by cash, it means this is paid by cash in the context of ITC, that some payment through credit and some payment is through cash.
Yes.
This cash is not to be confused with the other.
Anything.
Right.
Sir, you are very correct. You yourself being in department such a long period, you know the importance of that. I am thankful to you that we have clarified that. We are only two methods of payment: ITC ledger and cash ledger. When I file my GST or 3B, PLA and assignment. So when I file my 3B, I have an option to pay through ITC ledger or through cash ledger. It is not any other mode. Sir, if you permit me, one or two very important issues that are raised by Dutt Majumder Sahab, because he has been chairman. In fact, he is, you can say, father of GST, because during your period you have started. Sir, you have mentioned about basically about the definition of the project, whether it is to be taken as RERA or what kind of thing. Sir, primary reliance has been made on the RERA Act, whatever is mentioned, so that again, not to confuse people about the GST Act and GST implementation and RERA, because builder has to follow both laws. So we have taken most of the reliance has been done on most of the definitions as they are given in the RERA. In fact, we will be doing to that extent that the definition of a project as given in RERA as such will be again mentioned in the notification that we are going to bring out, so that there is no doubt. Like you have mentioned, let's say many people have this doubt. You have also partially mentioned that when you are having, let's say I'm a builder, developer, I'm having phase 1, phase 2 and phase 3. Let's take phase 1. In phase 1 I have, let's say, 6 towers, right? In phase 2, let us say I have another 6 towers. In phase 3, let us say I have another 6 towers. Now, as on 31st March, if I have started constructing the phase 1 and I am yet to start, let's say, constructing phase 2, I am yet to start, let's say, constructing phase 3. But for the purposes of RERA, I have registered project wise. As you are all aware, RERA project definition is being done. And as per all of you are aware that, I will have to take a commencement certificate from the appropriate authority. Where RERA is available from RERA, where RERA is not there in particular state, even the authority is there, some of the states they may not be there, from the competent authority as defined in the RERA Act. So if I take a commencement certificate and if I have not completed, there is something called completion certificate. So if I am between commencement to completion certificate, subject to the actual verification that you have started the work, you will be doing for project. Let's say in the example I have quoted, it will be from the phase 1. Phase 1, if you have registered as a project, so it will be for the phase 1. In phase 1, even though you may be having 6 towers, but for all the 6 towers, it will be one project. You will be declaring it one project. It answers some of the points that you raised. So for that, you have an option to declare. Even though in the phase 1, let's say there are 6 towers, 1 tower you have already near completion. You have mentioned that people will take, if it's in the near completion, people may not take. If you have registered that as a project, even though out of the 6 towers, 2 towers are almost near completion, let's say other 4 towers are still in the excavation stage, you have registered that as one project. So for the entire project, you will have to make an option for a date which will be announced by the government within that date, whether you are going to follow the old rate of 12% with ITC, I'm talking of other than affordable, or you want to adopt to the new rate of 5% without ITC. Now here, the point you will have to appreciate is that for the phase 2 and the phase 3, even though bookings have started, but it is not taken a commencement certificate.
Okay.
So probably for those, he has to go for the new rate.
New rates, yeah. Under
We
new
will
scheme.
be asking them, as mentioned in the press note given by GST Council, a reasonable date would be given. Before that date, you will have to exercise your option. However, from 1st April, the new rates will come into effect. Meaning, you will have to make up your mind that you are going to opt for the existing project, whether you want to follow the old rate of 12% with ITC. If so, you may start cutting invoices with your preferred option. On 1st April, you cut an invoice.
Right.
If you are decided to stick to the 12% with ITC, you may raise invoice, irrespective of the fact that you are yet to file a declaration with the government, because the date before which you have to make a declaration would be after 1st April, maybe it will be some particular date.
Yes.
So you don't have to wait for making a declaration is not a precondition for you to cut an invoice on 1st April under which scheme you want. Meaning, thereby the 1st April onwards, whatever the invoice that you cut, that itself is indirectly mentions which scheme you would like to cut.
Issuance of invoice will be deemed to be the option.
Option. However, if you do not make any declaration for the date to be prescribed, it will be presumed that you are going for the new rate. That has been made very clear in the press note that if you do not opt for it, you will be going for the new rate.
Right, correct.
Here, when I was talking about cost that was increased or not, on that point I would like to again make a mention. Here we have also mentioned that in case builder is taking works contract from a, let's say, contractor. So if you have mentioned in the existing notification 11/2017 at 1 serial number 4, we have said that if it is for affordable housing, the rate of tax is going to be concessional rate of 6+6. I hope you remember that. In the affordable scheme that we are there prior to 1st April, outward supply is effective 8%.
Correct.
To those builders and developers, we said if they are giving the contract to a contractor, from the contractor they are taking a service or works contract, we have mentioned there that affordable, it will be in a reduced rate of 6+6. That continues to be there in the new scheme also. Government has made an announcement. So I think you have noticed that. They have mentioned that, saying that that will continue.
That will continue. Yes.
So the works because that particular portion is not altered. So that means the works contractors who are giving service to the builders on this,
affordable housing.
Affordable and the works contractors who are giving service for the affordable houses.
Affordable housing.
Will continue to enjoy the rate of
6%.
6+6, that's around 12%. So that also is going to weigh in your favor, that probably there is no reason, justified reason, why people will not prefer the new rate for the 1%. We are very confident you will also, I am very sure, will agree with me. If it is 1% with so many benefits available, we are expecting that people will obviously go for the new rate of the thing.
So let's talk about some complications now.
One
so
by one.
simple. What are the
If you raise, what are your doubts you
Yes,
raise?
yes.
It's better that one by one I can clarify to the extent government has made the information public.
So I have 3-4 questions. One which Shailendra ji also raised, that why this option of continuing old rate was for ongoing projects only. Why it was not extended perpetually, that you can opt for 12% if you have ITC, etc. and you can go for 1% or 5%, whichever is more beneficial. That's the first question I have.
First question is that your proposal was that the option that is given, why shouldn't it be given for the after 1/4 also?
Yes, sir.
If you have seen in the starting of the thing also I mentioned it too. If you have seen restaurant service also, we have made 5% without ITC, and you have seen that everybody is following 5% without ITC. Under section 9 there is a tariff rate that is prescribed. Under section 11 we give a concession rate. So here is 2 such schemes, restaurant and real estate, wherein the consumers are more, where B2C supplies are more.
Right.
So you have made it mandatory for all the builders to go ahead for the 5% without ITC because of various reasons which I have already mentioned. So the government intends to be very firm as far as the consumers are concerned, that it will be available to them with 5%. So to make that benefit available to that, we are making it compulsory for all the builders that there is no choice. It's a conditional notification under section 9 and section 11, wherein we said that it is mandatory for the projects after 1/4, you will have to offer a concession rate of 5%, of course without tax. I hope
that is to take care of the benefit of that the input tax credit is
passed on.
Passed on. That is that's what was not happening. Now
was not being passed on. So even if you deny also, there is no difference that comes to the consumer, and consumer is not interested in it.
It is a consumer friendly
initiative from the
and
government.
the builders will do it.
Here I do have one point. If we feel that to do away with the input tax credit and just for ease of doing business, if we are reducing the GST rates 1%, 5% or any rates, then I think from the rollout of the GST and till date, we see that for many items the rates have been reduced like that, and composition scheme has also been increased. Yeah. So don't you feel that we are heading towards that ease of doing business is more important than seamless input tax credit? And if it is so, then we can calculate, yes, forget about the input tax credit, everybody should pay a notional value addition tax. So that way it will be so easy for everybody. It will be so easy to comply with everybody. Just what is your turnover, you pay 5%. What is your tax
becomes very similar to income tax.
You pay 2%.
Yes.
It will be so simple.
Actually, I have one related point. So, like government has all database that say for a construction company how much input tax credit comes. So like you were giving an example that if a flat is of 45 lakhs, someone should not have a problem of paying 45,000 as tax. But in my view, it may not be as simple, because for construction of 45 lakhs flat, he may be incurring 30-40% material cost, labor cost, on which 18% rate will apply. That works out to say 2 lakh, 2,50,000, etc. So an easier thing could have been, okay, for real estate industry, we expect ITC incidence to be say 5%, whatever government works out to be. So we make a scheme that, for say affordable, the rate is 6% with ITC. For non-affordable, say it's 9% without ITC. Something of this sort also could have been worked out. Then this seamless flow of credit and this related complications of reversals of credit, RCM, registered procurements, that could have been avoided.
Can
Yeah,
I
please.
Yes.
When Mr. Bisla said that ITC supply chain is the main spine of the, main soul of the GST, how come it is violated? Yes, it is true that, one of the trade facilitation measures, if you have seen, sir, our earlier years also, it was mod VAT to send VAT to state government side VAT to we have graduated to ITC. Yes, it is true that 90% of the supplies that are done under GST are beneficial if they are done with the ITC being passed on. But there are certain sectors which the government, out of previous experience and the experience after 1st July, has realized that in this sector, it is not compulsory that ITC is to pass on. I can quote you 2 examples other than what I have already mentioned. One is about, I can mention about, airfare economy class. If you have seen airfare economy class, we offered a concession rate. There also we said without ITC. Similar, second example I can quote is about, again, railway reservations. Railway reservation, if you go to non-AC, there also we said saying that we offer you without ITC this much concession rate. Third one, I have already mentioned it about restaurant services, where mainly restaurant people are there, where not much of
canteen mess also.
Yeah. So then fourth one now we are putting up across is this real estate. So these 4 sectors till date, we have found saying that probably consumer will be benefited more by offering without ITC. At the same time, we respect and we continue to do that of supply chain of ITC to be continued. Like you have also mentioned saying that why didn't government to do that instead of making it from 12% with ITC to 5% without ITC, you have mentioned that why not make it some 10% with ITC or 8% with ITC. Now, if you have seen real estate sector, let's say just 1 or 2 years before, the effect of certain factors, as you are well aware, I did not say that has impacted them. RERA Act also came. Then came the third serving of the GST.
Right.
So, as per the representations given by the government, we have received huge number of representations. I mean, big organizations in the construction industry, you know very well, have given numerous representations that probably the rate will have to be reduced. They themselves have said, saying that one way of doing is that with ITC you reduce this, second way of doing is without ITC they reduce it. It's on their demand that the government has seriously considered and went ahead with that. We are hopeful that it will be a successful scheme and it will pay.
That means, that means the government is taking a very pragmatic approach to the whole sector, as you say. And here I would say the only word of caution is that we should exercise moderation. That means you should not go on extending this to other items. So the whole soul of GST will be destroyed.
On this optimistic note, let me thank my guests and very rightly suggested. Of course, Mr. Rahman clarified that the GST Council is willing to revisit that 45 lakhs cap. This is not fixed. So I mean, maybe a beginning is to be made with 45 lakhs. This is not a small amount. Maybe in a couple of months, perhaps, when the new government is in place and the GST Council would like to take a fresh look at it. But as rightly suggested by other domain experts, that ITC should largely be treated as sacred, not to be violated. But however, the government has to sometimes do it in order to pass on certain benefits to the consumer. Consumers have to be taken care of. So keeping in mind and to balance it, the benefits for the consumer and benefits for the industry as well. So probably because of that, there has been a multiplicity number of composition schemes like restaurant and maybe service providers scheme up to 50 lakhs, and now for the real estate as well. But some of the important points have been clarified. The real estate developers, they have to pull up their socks, take care of their books, and certainly pass on the benefits to the consumers, make their project more efficient, and try to earn some smile on the face of revenue officers. Ultimately, they will gain, revenue will gain, and hopefully the consumers will also gain. Thanking you all for watching.
Thank you.
Thank you.
Thanks.